Why most traders fail without realizing it. The hard truth about trading no one tells beginners.
How to build a trading routine and discipline. Up to this point, we've talked about mindset, expectations, and the hard truths about trading. But today, we're moving from theory to execution. Because here's the reality. You can understand trading psychology perfectly. You can know every beginner mistake. You can even have a decent strategy and still lose money. Why? Because without routine and discipline, trading becomes emotional, random, and inconsistent. Most traders don't fail because they lack knowledge. They fail because they lack structure. In this video, I'm going to show you how consistent traders actually operate. Not hype, not motivation, but a simple, repeatable trading routine that builds discipline over time. Part 1. Why most traders struggle with discipline. Most people come to trading because they want freedom. Freedom from schedules, freedom from bosses, freedom to work when they want. But what most traders don't realize is this. The market doesn't reward freedom, it rewards structure. When you trade without a routine, you open charts at random times, you take trades based on feelings, and you react instead of plan. One day you're confident, the next day you're hesitant, and your results reflect that inconsistency. Discipline isn't about being strict, it's about removing decisions. The fewer decisions you make in the moment, the fewer mistakes you make. Part 2. The dangerous myth of motivation. Many traders wait until they feel ready. They say things like, I'll get disciplined once I start winning. I'll journal when I'm more confident. I'll follow rules when the market makes sense. That thinking keeps traders stuck. Professional traders don't rely on motivation. They rely on habits. Motivation comes and goes. Habits stay. Discipline is built on boring repetition, doing the same thing, the same way, every day. And that's what most traders avoid. What a real trading routine looks like. A solid trading routine has 3 non-negotiable phases. Not indicators, not signals, not predictions. Structure. Phase 1. Pre-market preparation. Before you place a single trade, your job is preparation, not prediction. This means checking higher time frames, marking key support and resistance levels, identifying the market condition, trend, range, or uncertainty, and most importantly, deciding if today is even worth trading. Some of your best trading days will be days you don't trade. If the market doesn't match your system, you step aside. That is discipline. Phase 2. Execution rules. Execution is where emotions show up, so your rules must already be decided. Before entering any trade, you must know why you're entering, where your stop loss is, where your target is, and how much you're risking. If any one of those is unclear, you don't trade. No chasing, no improvising, no exceptions. Rules exist to protect you from yourself. Phase 3. Post-trade review. This is the most ignored part of trading, and the most important. After each session, review every trade. Screenshot entries and exits, and write what you followed and what you broke. Don't focus on profit, focus on process. You don't improve by winning, you improve by correcting behavior. Part 4. Discipline versus emotions. You will never remove emotions from trading. Fear, greed, doubt, frustration. They don't disappear. Disciplined traders feel them too. The difference is they don't act on them. They follow rules, especially when it's uncomfortable. Every rule-followed trade builds confidence. Every emotional trade destroys it. Part 5. Why boring trading wins. Here's a truth most people don't want to hear. Successful trading is boring. Same routine, same setups, same risk, over and over. If you're chasing excitement, the market will punish you. Consistency comes from simplicity. Do less, do it better. If you build a routine and respect it, your trading will start to make sense. Not overnight, but over time. In the next video, we're talking about risk management and why most traders lose money even when they're right. Subscribe and stay with the series because this is where real progress begins.